Hi everyone. In this video we're going to be looking at the SAM singles practice set, and I'm going to walk you through the process for completing the project. So let's get into it. Now, reminder, you have a paper copy that I've handed out to everyone, so you should have that somewhere. And then if you don't, I've also got the information all snipped and kind of screenshots here so we can see. Make sure that's working. So we can see all the same information that's in the paper packet is just here in the Excel as well. We don't have to, use the paper if we don't want to do that way. We've got our general journal, our instructions, a listing, and these are journal entries from last month essentially, and we're in February in this example case study. This is all the January entries just for reference. Here's all the detail of the February entries that we're going to be journalizing and posting and accounting for essentially. And then we've got AR and AP subsidiary ledgers or subledgers. And remember that the totals of the subledgers here tie up into the balances. So these are all the balances as of the beginning of February. Or this shows post-closing trial balance at the end of January. And so the end of January, very end of January becomes the very beginning of February as we roll from one accounting period, 1 month to the next, essentially. And so you can see here, here's our AR subledger. So note that the 8,500 total that's in the accounting records is supported by this subledger, which basically shows, in this instance, just who owes us money. In a real subledger, too, there'd be other information like how long that receivable has been outstanding, how old is it? So that way we can kind of gauge whether we have some really old outstanding amounts owed to us, and we can do extra efforts to follow up with those in the real world. So, and then we've got same thing for our subsidiary ledger. So you can kind of see, I'm just highlighting this so you can see how those tie out. I'll make that a little darker. So those agree. So the 2,000 that's in our accounting records is supported by this subledger that shows who we owe the money to. This is who owes us money. This is accounts receivable. This is accounts payable, who we owe money to. And so 3 different companies. And again, in the real world, there'd be other information included in a subledger. Most importantly, how old these are. So again, we can figure out if we have some really old outstanding bills that need to be paid, if that's an issue for some reason. So so we'll have that. We'll be updating these as we go through February, as well as we receive money, pay bills, and then incur new payables and record new receivables. And then we've got our chart of accounts, essentially our whole menu of possible accounts to choose from. So here's our instructions, little overview of the project, the transactions, and here you can see, scroll back and forth to access all that information. And then for February here, what we're going to be using to do our accounting, we have our general journal here. And one thing I'm going to do, I'm not going to do that at this moment, but hold that thought. I might show you all how to freeze the top pane, so as we scroll down, which I'll just show you real quick and then undo it. You can do a freeze pane, and then as you scroll down, it will maintain the header. So that's kind of handy sometimes to have, but let's undo that for now. Okay, so we've got our general journal where we're going to record all our journal entries. I'm just scrolling down here, and then we get into our general ledger, which has all the detail of the accounts, all the detail of the accounts by account, essentially. So cash, we've got all our information here, and AR, and so on and so forth. So you can see as we go through, all of the accounts are reflected. We have lots of balance sheet accounts. Here's our payables. Here's equity accounts, retained earnings, common stock. Then we get down into the dividends. Then we get down into revenues and expenses, all the way through. So let's see what else to show you. Okay, so that's kind of the main page here, and then we have a second tab down below we can click into, and that will includes 3 different trial balances that we're going to use. We've got our unadjusted trial balance, so that's before we make our adjusting entries, and I'm going to make this a little bit wider. Before we make our adjusting entries, the trial balance after we make our adjusting entries, and then our post-close trial balance after we do our closing entries. And then we are going to prepare financial statements with the adjusted trial balance. And so we've got kind of a template of financial statements here, and we'll be filling that out as we go. So, all right, let's jump over and start taking a look at it. Okay, so all of our journal entries are going to be based off of this list of transactions over here, essentially. That's what we're going to do. And I guess just to go over this real quick, so we have our, again, we went over all the details, but the business is a dating consultation and hosting events for singles, so a dating kind of business. And we are the new bookkeeper, and so we're an employee of the business. And here's our instructions. So step 1, we'll enter our transactions into the journal. And so here's all of our transactions down here. So I think the first thing I'm going to do, is I'm going to drag this snip over next to the journals, and then I'll move it back after we get down the line here, and you all can, that way it's just easier to put our journal entries directly off. So, okay, feel free to do the same if you're following along in the Excel template. So for the first transaction here, so let's first thing I'm going to do is just as a formatting thing, put the date in above, or the year, and then I'm just going to put dates. Let me change the format to text and dates in that format, so we don't have to keep putting the year in every time that way. Okay, so journal entry number 1, we issued a check for $180 for postage and handling on a mass marketing letter sent out that afternoon. So we know we've got cash, check same as cash. It's going to be our credit. So let's put that in. I'm going to indent a couple spaces there. And then some sort of expense. I'm going to move this out of the way so we can see our chart of accounts real quick. And looking through our expenses here, we have postage expense. So let's go ahead and use that account. Let's move this back over. So that'll be our debit. So our expenses go up, and our cash goes up as well. Oh, I was just doing something real quick. I feel like the formatting on this looks a little funny. Bear with me for one second here. You shouldn't have to do this in your version. I'm just going to make sure that the row height is good for us there. Cool. Okay. Just cleaning things up a little bit. Okay. So this was, so we need our explanation. So I'm just going to put mail house and check number 100. And I like to have my explanations italicized. Okay, and I'm going to steal this journal entry and just paste it in and use it as a template as we go forward. So now we're signing a 1-year lease for office space and paid February's rent of $2,200. We've got a check number to Quant Company. So I'm going to change the name to Quant, update our check number to 101, update the date to the 2nd, and instead of postage expense, I'm going to change that to rent expense. And then the total amount, $2,200. And again, one little tweak on the formatting, because I want that to be in accounting format. So bear with me for a moment. Once we get this all good, then we'll. Okay. Sorry, I exported this out of a PDF into an Excel format. It makes a little funky kind of formatting stuff like that. So just a little cleanup there. All right, so what's our next journal entry then? Another one on the 2nd. We issued check number 102 to Spy Company for $8,900 to purchase surveillance equipment, okay, to observe their dates and better understand their dating problems. So that's cool. You know what? I want to do one last thing. Sorry, all this formatting, taking off this merging and wrapping text and everything. I'll do this, okay. And then, sorry, we got to indent again because I took that off. Okay, now I think we're good in terms of formatting, hopefully. Okay, again, I'm going to copy and take my journal entry formatting from before. I'm going to go back and check my chart of accounts again. So I'm dragging this the transactions screenshot there out of the way. And I want to see what accounts we have to record our surveillance, our equipment. So, okay, surveillance equipment is the name of the account 140. So that's going to be our debit then. I think I spelled that right. Let me do a quick spell check. Oh, geez. Okay. I must have spelled it right because it didn't pick it up, but it started going way down there. So I think we're good to go. Surveillance equipment. We paid cash, I believe. Let's see. Yep, we issued a check. So check number 102. Let's just put in the name, Spy Co. And there we go. And this is $8,900. I'm going to do a link to there too, so when we put in our debit, it'll automatically credit. That's usually helpful. Sometimes not if you have more than 2 lines in an entry, but okay. Now we're on the 3rd. So on the 3rd, we performed a dating consultation and billed $3,000. Okay, so let's put the name. Maybe we'll just put D. Taluvia and anything else here? That's probably good. That way we'll know it's the customer. And it says that we billed her, so we didn't collect payment yet. So when we haven't collected payment, we're going to receive payment later. That's where we're going to put accounts payable in. And let's check our revenue accounts just real quick, because I think there's more than one on this. Yeah, we have event revenue and consulting revenue and book sales. And so what we're doing here is consulting. So we're going to use the consulting revenue account. And how much was it? 3,000. Okay. Another entry on the 3rd. That's one nice thing about copying and pasting your entries is the dates. You don't have to change them if they're on the same day, so that's nice. Okay, so we purchased 6 months liability insurance to travelers. Okay, let's put travelers insurance, and we'll say check number 103. We've got prepaid insurance and cash going out the door. So cash down, our asset prepaid insurance goes up. And that was, and oh, it's another handy thing to have in here. Let's put, oh, shoot, where'd it go? Sorry, let me scroll up. So I'm going to widen this just a little bit. So I'm going to put, oh, come on. Okay. Let's put in, where was it? 6 months. 6 month. Let's just put 6 MO, so 6 months. That way we know how many months this reflects, essentially, right? So we could tell it's, what, $200 a month? I think. No. What's 3,000? Wait, 6. 500. Yeah. Okay. $500 a month. So that was there. We'll do an adjusting entry. I'm assuming it covers February, so we'll have to see our adjusting entries at the end, but we'll probably be reducing that by 1/6 and recording the insurance used for February at the end. All right, on the 4th, we received $10,000 and issued shares of common stock to Amanda Friend, I think. Okay, so that's cash going up. And then common stock is going to be our increase. And let's just put a friend shares. Just put it on that. That's kind of a funny thing. 10,000. So the business now has $10,000 in cash, like an investment into the business, right? And that's reflected in the common stock ownership portion. Okay, so now we're on to the 5th. And on the 5th, we received $3,500 for total for services performed the previous month. So now we're getting the cash. Our receivables are going to go down. And let's just say J. Dudley, P. Gooseman, and T. Telmuch. And I'm going to move this, just stretch that out a little bit. Okay, so now we're receiving amounts from last month. And so we can look at our receivables subledger. I got to move this out of the way to do that. Move that over. So this is a receipt of 3 payments totaling, this was on the 5th, totaling $3,500. So we're getting $3,500 in cash, and our accounts receivable is going down because we received it. We're not going to receive it in the future again. And here we can see our subledger. And so for our subledger, remember, so we are getting this from Dudley, Gooseman, and Telmuch. So that Dudley, Gooseman, and Telmuch. So now we can just zero those out. So our updated subledger now in AR should show just 2,000 because we've collected the other 3,500. And originally, if you undo that, originally it's 8,500. We collected 3,500. Wait, does that make sense? Oh, okay. Sorry, we only collected a portion, I think. I shouldn't zero those out then. Really, what it'll be is the amount owed to us by Dudley minus the amount he paid us, so 500. So Dudley still owes us more money, but he paid us 500, so we'll subtract 500 out of there. Gooseman paid us 2,000, so that's totally paid off. So we'll zero that receivable out. And then Tammy Telmuch paid us the 1,000. So yeah, Dudley still owes us 3,000, and we're still waiting for that payment in total. And you can just do one entry in the general journal to reflect the total receipt of those 3. We put it in the explanation. So, okay, let's move on with the next entry. So on the 7th, we hosted a speed dating night where Ivy League graduates paid $60 to go on 5-minute dates. 50 people attended, and cash was collected from all but 2 who agreed to mail in the check. Okay, so this journal entry, I'm gonna copy this, paste that down. Then I'm gonna copy this and paste that here, just so we have we need 3 lines for this one. And cash is going to be one of those lines. And let's say Ivy League speed dating. That's good. Let's get rid of our links there. Okay, so for this one, we performed a service and we've earned this revenue. So we're going to put in, this was an event, so our event revenue account, not consulting because that was a different one, but event revenue here. So now we're going to go in and say our credit is to event revenue. So event revenue goes up. And we received, most of the people paid cash, it says, but 2 of the participants still owe us payment. So we're going to put accounts receivable on the books to reflect that they owe us some cash. Okay, the total we earned was 60 times 50 people, so $3,000. And then we can do a formula here. We'll just say 60 times 48 paid us in cash. And then this should be 60 times 2 who didn't pay us in cash yet, or 120, because it was $60 per person. How many, each person, 50 people or whatever. And then, so in total, these 2 amounts here you can see sum up to the revenue, and they reflect that this is all the cash we have now, but then we are still owed 120. So it doesn't tell us specifically who. Oh no, it does. Sorry, John Smith and Wendy Jones. So to make sure, just to have us be updated, let's go into our AR subledger and say John Smith and Wendy Jones, and then $60 and $60. So we always want to keep the subledger up to date. And if we were doing the ledger entries right now, you would see that the total in the AR General Journal, which I'm going to do that after we go through, but you'll see the total here in the AR General Journal will match up to the ending balance in our AR. And if I was doing this concurrently, of doing the journal entry and then journalizing it into the ledger would have a current balance of $5,120, reflecting all these amounts that people owe us. Okay, so that was on the 7th. So let's look at the 8th. Received an invoice, so I'm going to just go up and steal one of these 2-line entries. I think it's only going to have 2 lines. So on the 8th, we received an invoice for $600 for an advertisement. So let's do advertising expense and accounts payable, right? So we're getting the bill and they owe us, or we owe them money. We'll say SF News and Review number 52A7J. That's the invoice number, the bill number, and it was $600. And again, if we want to be accurate in updating our subledgers, then we're going to put in, because we increased our payable, so let's add this into the payable subledger and say SF News and Review, and that was $600. So we now owe all of these amounts. Okay, let's drag that back, scroll over, and carry on. Okay, so that was on the 8th. Oh, there's another one on the 8th, so we don't have to change our date there. That's nice. Performed a dating consultation for Noah Lot and received $6,000. So actually, I'm going to go steal this entry above because it's got more of the accounts are the same, so we've already got that all built in. And we've got, ooh, you know what? Did I put this one in? Oh, I think I forgot to put that in. Okay, so sorry, I missed one. Let's make sure our AR subledger is balanced up for this one as well. We had accounts receivable for D. Tolubia, 3,000. That was previous, and now we've done another one, and I think it says we billed them, right? Oh no, this one we just received the cash, so we don't need any more AR. But I had forgotten to do it for this entry up here, so I now included that in the subledger. Okay, cash. He paid us in cash. That was $6,000, and this was in No, a lot. Okay, I think that's like a pun or something. Alrighty, so on the 9th, geez, keeps on, sorry, jumping down to the bottom there. On the 9th, we paid outstanding invoices to 3 different companies, and it says these were accrued last month. So we're going to have cash decreasing and accounts payable decreasing. So debiting our liability decreases it. The total is $350 plus $500 plus $1,150, and so $2,000 in total. And let's say it's checks. Let's put a Sun Co, Moon Co, Stars Co, check 104-106. And we can stretch this out again a little bit. Okay, so that's that, and then great. And then let's update our subledger again. So here's our AP subledger. We're updating now. So we paid the $350, so that's gone. We paid the Moon Company, so that's gone, and then Stars Company. So now the only amount we owe currently is $600 to the News and Review for the advertising expense we recorded here just a moment back. Oh, right, on the 10th, then we had received $60. Okay, so now we're getting cash coming in. I'm going to steal this entry because this is kind of similar. And this was on the 10th. So same accounts, but now we're receiving the 2 payments from the speed dating night. So 60 plus 60, so 120. And this is going to be coming from J. Smith and Wendy Jones. And then we're going to go back to our subledger. We always want to have this updated. So J. Smith and Wendy Jones, they don't owe us anything else at this point. So that's good. Good to be paid. Okay, so on the 11th, we purchased some office supplies. Okay, and on account, so accounts payable. Let's say Home Depot invoice number 6309, and we bought $800 worth. And again, let's go to our payable subledger, because we did put that into our AP, and it was $800. So now we have two outstanding balances to 2 different vendors. Okay, and then on the 14th, let's see, Sam's received invoice for $800. Okay, so I already know I'm going to just do this first. To do it, let's say I'm just going to do this like DC and H Law Office instead of writing all that out. But we need to put it in our subledger. And then let's record the entry. Let's steal this one. That was on the... Oh, did I skip that? Look at my dates are off here. Let's see. Okay, so 2/8. 2/8. Okay, those look good. This payment on the 9th, that's good. On the 10th, we received that. It's okay. 2/11. What am I missing? Oh, 2/11. Okay, so we purchased that, and then the 14th. Oh, maybe I just copied this in twice. Okay, so on the 14th, then we have legal expense. Let's look at our chart of accounts real quick, just see exactly where. Yep. Okay, they just call it legal expense. So our debit will be increased legal expense, and then on the 14th, or sorry, on the accounts payable, and it was $800, so that's already in there. Same amount twice for the 2 different things. That's kind of funny. Let's put our invoice number in here, 97389, and this is going to be for DCH Law Offices. Okay, so that's everything off that first kind of snipped screenshot. Let's just pull that back over out of the way. And then there's a few more entries to record. So now we're using this portion. It was kind of snipped into 2 pieces. And yeah, let's keep going through. Okay, on the 15th, we hosted Goth Date Night where 40 participants paid $60 each to attend a dinner and meet other Goth singles. Okay, cool. Okay, and they all paid us in cash because it doesn't say anybody owed us. So we have total cash. Event revenue. This was Goth Night, Goth Date Night. And the total amount we earned was 60 times 40, so $2,400. And cool. We don't need to update, AR, AP subledgers or anything. All cash there. So on the 16th, now we've got issued our check to pay the catering. Okay, so let's see, what do we have? Catering expense account. Let me look at that real quick. Yeah, catering expense. Okay, so catering expense. And cash, we cut the check for it. I'm going to have the same explanation. I'm just going to say Sam and Ella's, and we'll say invoice number 10. Oh, this was we paid it, sorry. So check number 107. Okay, great. All right, so now on the 17th, we received $12,000 advance for dating consultation services for 2 months. Okay, so this is us getting cash, and this is unearned revenue. Remember, that's a liability. And we'll say S good, Feb and March prepayment, 12 grand. And remember, this is us. We haven't earned this revenue yet. It's unearned. You know, it's a liability at this point. We have the asset, but it's not ours. It's in our account, in our possession, but not yet ours until we actually do the services. So maybe there's an adjusting entry for that at the end. Okay, on the 18th, we observed one of the dates and met with him to discuss her observations, and we got a check for $6,000. So $6,000. And this will be actual revenue, and this will be consulting revenue, not event revenue. Oh my gosh. Thing. Hard to click in. You have to, so to get in, how I'm doing that too, just if you double click to get into the cell, or you can do it up here in the formula bar above. Boom, 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 boom. That was C Burnett. Okay. 223. We performed a consultation and billed $4,000. So similar, but now we're going to have accounts receivable because we're billing them. P, P, F, A, and G. Okay. And that was 4,000. And now remember, we're hitting accounts receivable or increasing it. We got to go up here and update our accounts receivable. Hopefully I don't run out of room. And that was for P. I'm just going to copy this. I don't know what the heck that says. Okay, so now we've got an increase to accounts receivable in our subledger, and we've recorded our journal entry. And we'll update the ledger here in a moment. All right, let's see, just a couple more entries. Okay, so here now we're going to issue a check for a few different vendors. I'm going to steal this journal entry because it's similar. Same accounts, and we're paying 800 plus 800, and this is for Office Depot and DCH Law Office, and we'll say check number 108 to 109. Great. Space in there. Okay. So now, again, we always have to go update our subledger. So now Office Depot and the Law one are gone. So we just have the news and review invoice or amount left to pay there on the subledger. And then we're getting real close now. A few more entries. So on the 25th, we issued dividends totaling $1,000. So cash is down, so that looks good. Then we're going to record the dividends. And let's just say check number 110-112, $1,000. Okay, on the 27th, we received an invoice for some cell phone service. So let's look at our chart of accounts. What do they call this? Phone, telephone, maybe? Yep, telephone expense. not cash, but accounts payable. And that was AT&T invoice number 8783AC15. And again, we need to update our sub ledger. So increase the sub ledger to reflect the amount there. And then very quickly, I'm getting down to the end of my 30-minute recording on my software here. So on the 28th, same type of deal, but it was to utility expense, I think. Or shoot, I'm running out of time. Okay. Gotta read. Okay, started a new recording session. So on the 28th, it was looking at our chart of accounts. Utilities expense is the right account for that. Same accounts payables, right? It was PG&E, and I've got an invoice number 25351, and not 1,000, but 230, and yeah, okay, we've got everything. That looks good there. And while we're at it, okay, so we've got our adjusting entries here. Let's go ahead and do those right now so we can just have all our journal entries done. And so all of our adjusting entries are going to be, actually I'm just going to steal this, at the end of the month. So on the last day of the month, we're going to put that as the date. We're doing depreciation, so we're going to debit our depreciation expense and credit our contra asset account of accumulated depreciation. Remember that. And we're going to put surveillance equipment. Actually, I'm curious if we have a, yeah, accumulated depreciation. Okay, so it says /surveillance, so let's do that. Okay. So the question is, what is the right amount of depreciation expense we need to, let me fix this. Depreciation, or let's just say Fed debt expense. How much depreciation are we going to record for this 1 month? So let's do our formula here and see what we can ascertain. So it was purchased on the 2nd, so it was $8,900 total. So $8,900 minus the salvage value of $500, and then divided by the life, which is 4 years, but we just want 1 month, and we're going to do this in months. So 4 years is the same thing as 48 months. And so it's going to be $175 per month of depreciation expense. And we're done with that one. Okay, perfect. On 2/8, Sam has supplies on hand. So remember, we purchased 800 up here. So 800. But now we've used a bunch of those supplies during the month. Now we're going to check to see how much we have left. And we have only 200. So we need to take the difference of 600 and do that as a reducing journal entry to office supplies. So we're going to decrease office supplies by 600. Record supplies expense to reflect the amounts used up. And we'll just say Feb office supplies used. Okay. And so you'll see when we get in the ledger, we debited office supplies for 800 to increase it, and now we're crediting it by 600 to decrease down to what's actually left over of 200. And you'll see that in the ledger in the running balance when we do that part. Okay, as bookkeeper, you earn $2,500. So this is salaries expense. You're an employee, remember. So the business is out paying you $2,500 and Samantha $4,000, and checks will be issued next month. And no withholdings. So we're going to have, let's look and see what it calls the Okay, wage and salary expense. And let's look at what the account is for our payable. Wages and salaries payable. Makes sense. And it was a total of 2,500 plus 4,000. So this is February. Let's say bookkeeper 2,500. Samantha 4,000. Okay, so now this is saying this was our earnings for February, or the employees, expenses. So we're recording 6,500, and then we're saying it's a payable because we're going to pay it next month, essentially. All right. By the end of February, Samantha performed 25% for dating consultation for Seymour Good. So that was on the 27th. That was, which one was that? Right here. So, or sorry, on the 17th. Yeah, on the 17th. So this customer paid us 12,000 in unearned revenue. So we had that, and now we've done 25% of that. So 3,000 will now be actually recorded as wages, or sorry, as revenue. So we're going to reduce the unearned revenue liability, and we're going to increase consulting revenue by, it says by 25% of the total deposit amount, which was 12,000. So 1/4 of 12,000 is 3,000. So we've earned $3,000, and we'll say 25% S good revenue earned. Okay, last journal entry now. We're almost there. By the end of February, 1 month of insurance has expired. Oh yeah, we were talking about that one. So now we've got insurance expense to record and prepaid insurance to reduce. Let's just say February insurance expense. And remember that was one of the first entries we did up here. Prepaid insurance for 3,000 for 6 months. So we've used up one of those 6 months. And so 1/6 of 3,000 is 500. So we've reduced that prepaid insurance asset account by 500 and record $500 of expense to reflect the usage of that month, or the expiration basically of that time period that we recovered. So we have 5 months left. You'll see this in the ledger, but if it was 3,000 to start, reflecting 6 months, we take away. We take away 1 month's worth, and the resulting amount is 2,500, which represents 5 times 500 per month. And you can see, okay, now we have 5 months left that way. All right, so we've got all of our journal entries done. That's great. I'm going to move our transactions back out of the way. Got our adjusting entries done. Everything's looking good. I'm going to delete some rows here because we don't need all this. Clean this whole thing up a little bit. And yeah, good to go. So what we want to do is we want to post all of our entries to the general ledger now. So we need to go and basically, you'll see it there. Maybe the posting process, but essentially we're going to put each of these debits and credits in their respective ledger accounts. So the first one is postage expense and cash. And so here we're going to be, our first thing we'll do is to just link in date. That's kind of annoying. We have to put I don't want to do that. I'm just going to leave it like that. That's fine. These ones say X1, the dates, and that is kind of helpful, I guess, I suppose. But they're all within the same year, so I'm not going to worry about it now. And anyway, we credited cash in this journal entry, 180. So we're going to take our running balance above minus the 180 to give us 24,820. I'm going to just double click those to stretch that out a little bit too, so it's easier to see. And then the other side of that entry was the postage expense. So let's go find our, and here's a way you can kind of quickly go. So Control F brings up a find. You can type in postage, click enter, and that'll take us right to postage expense. So if you see me doing that, that's Control F. And then we're going to link to postage expense. Oh, geez. That's, yeah, that's the right, that's the link, but we want the date. And then we're going to be debiting our postage expense for 200, as we did. Or sorry, for 180. And then we're going to have, basically we have a 0 plus another debit. And all the zeros you see in the revenues and expenses is due to the fact that we did the closing entries last month. So this is a closing entry which zeroes out all our temporary accounts, including revenues and expenses. And so we're just starting over from scratch basically in February as we go through and record all of our transactions. All right, the first entry is done. The next one is rent expense in cash. So I'm going to get the date. And we're going to record the credit here, 2,200. And so we're going to go equals the cell above minus the credit, because it's a debit minus a credit. If it was a debt, if we have a debit balance, if we debited that balance, then it would increase. And we'll check that out here. Sorry, text real quick. Okay. Okay, so that's, yeah, we're running balance. It's a debit balance, so it gets decreased by credits. And we're going to go back. What was the other side? That was cash, so we need to record rent expense. A lot of accounts. Okay. So scroll back up, get the date. And rent expense is 2,200. And then our running total. Pull just the debit over its first transaction. And good to go. Okay, the next entry, and I'm just gonna highlight these as I go, just to note that indicates that we have journalized them. So now surveillance equipment in cash. So let's credit our cash for 8,900. And at this point, if you all kind of see the whole formula of how to, this plus debit minus a credit, you can just do a formula that basically takes the previous amount plus the debit minus the credit. Like I said, since we have so many transactions in cash, let's just create a formula, and then we can just drag that down. And that's basically going to give us a current balance anytime we just put either debit or credit in the transaction spot. So that's kind of makes it a little easier. And then we had surveillance equipment was the other side. Oops. Oh, geez. Let me get the date there. And we're going to debit that amount. Again, that just gives us a total debit balance of 8,900. And good to go. All right, right, next one on the third, we have accounts receivable and consulting revenue. So let's go find AR. Oh, I think I'm missing. What was that? Let me check in. I've got a entry there with no date. I just want to make sure that that wasn't something I missed. Okay, that was on 128. And it was the Tammy Talmadge one. So, okay, that's fine. But this current one that we're actually recording in February is on the 3rd for D. Toluvia. And then the other side of that entry is going to be a credit to revenue. And it was, I think, consulting revenue. Where are we at? Okay, there we go. So consulting revenue. $3,000. And we've got a date of the 3rd. And again, revenue is another one that closes out to 0. So we have a 0% or $0 balance when we start, which we should. And then we're just going to start basically accumulating revenues and expenses again from that point forward. And okay, so we got both sides of that entry. And let's keep going. Okay, prepaid and cash. So let's go to our cash account. Notes on the 3rd. We're reducing cash for our payment. We've got our handy formula that just auto updates, so that's great. And then prepaid insurance, I think, was the other side. Yeah, prepaid insurance. Let's get our date. $3,000. Okay. So now we got that journal entry. We got that journalized. All right, then we received cash in exchange, for the common stock essentially. So now we have an increase in cash of 10,000. Or let's link to it. Better to link it. Now you can see an increase. Our formula is auto updating, so that's still great. And then common stock will be our credit here. And the date on that was 4th. I'm scrolling here. Common stock. Okay, so we got the common stock updated, ledger account, and the cash is also updated, so we're good on that one. Now we're getting some of the receivables in, 3,500. So another one, an increase in cash. Link our date, and then link the amount. And that was an accounts receivable coming in. But a credit this time to reduce the AR. So now we can say equals this. Oh, I guess we didn't update the running total there. So that was the accounts receivable going up. And now it's going to be decreasing with the credit. back down. All right, so we're good there. And now we've got some cash, AR, and revenue. Increase, so a debit to cash. An increase in AR. $120. And an increase. And let's do our update here. So that. Oh, now see, that's a good check. I just accidentally put that in the credit column, and it should have been a debit. It's a good check to make sure we did or not. Sometimes you put it in the wrong spot. That could be bad. And then revenue is going to be our credit. Offset there. And that was event revenue. On the 7th, revenues increased with the credit, 3,000. Running total. It's our first one, first revenue transaction. So good to go. Got that one recorded. Okay, now on the 8th, we have expense and accounts payable, advertising expense. And AP. And it's our credit. So increase in accounts payable, 600. And we're going to take our credit balance plus our credit transaction to running total was 2,600. And I think it was advertising expense was the other side. Yeah. So let's go find our advertising expense account. On the 8th, and our debit to increase our expense account. And we had a zero balance, so basically zero plus into a debit position. So that's an increase on the normal balance or an expense. All right, we got both those recorded. Good to go. Yeah, there's a lot of legwork. And so one thing to note is that in a modern accounting system, when you input just a journal entry, it would fill out all the ledgers and everything for you. So it's good to understand the process, but don't think that this is what an accounting job is actually like. It's this constant Excel. I mean, it is constant Excel, but not constant journalizing like this. This is kind of a old school style, but doing this process is important because it teaches you the mechanics of what's happening here quite well. Okay, so now we got cash and consulting revenue coming in. And cash is going up with the debit. And let's go find our revenue account. Consulting revenue. And 6,000 credit. Boom. Okay. That's funny. We need to add those together. For some reason it wasn't adding. So we're up to 9,000 in revenue for this month so far, or the consulting revenue so far. We've got 3,000 in event revenue, so total revenue of 10,000 or 12,000. All right, and then we've got our accounts payable and cash on the 9th. payment there. This is going to be a reduction in cash, so a credit. Again, that's just going to update for us. We could put formulas in the other accounts too. Cash has so many transactions that it made the most sense to do it there. But you could do it in the other accounts if you were so inclined. So now we've got accounts payable. That's 2,000. It's a decrease. It's a debit to accounts payable. And our credit plus, or I'm sorry, now we're reducing accounts payable by the debit. So that'll bring us down to 600. Okay, got that journal entry done. Whew, all right, we're making progress. And now we got cash and receivables on the 10th. This is going to be an increase to cash, 120. And the accounts receivable is going to decrease because we received that receivable, so it's no longer a receivable. For 120. And again, we're going to take the running total minus the 120 to end up at 8,000. Okay, got that journal entry done. Now our office supplies purchase on the 11th and with AP. So let's find our office supplies account. And that was 800 for debit, and then AP side. It's an increase to AP, which is a credit. And that's going to increase our credit balance up to 1,400. Stretch that out real quick just to make it a little more clean. Okay, so now we're on to our legal expense on the 14th in AP. That's going to be another increase to record the bill that we got, 800. And that's going to be our running previous balance plus an increase for the credit. And then it was, shoot, I forgot what it was. That was the legal expense. Okay, so now let's go find our legal expense account. Here it is. And it's a debit to increase in expense. So record it. Oh, did I get it? There we go. And that just comes over to our running total. Nothing else to do there. Okay, great. That's recorded. All right, cash and event revenue now. So on the 14th, and cash is going up. Or sorry, the 15th. And that was, oh shoot, I forgot. It was event revenue? Event revenue, yeah. Okay, let's go find our event revenue. Here we are. $15th. And again, a credit is an increase in our revenue account. All right, we got both sides there. Debits and credits. All right, on the 16th, we recorded some catering expense, and we had a reduction in cash. was the 16th. Auto updates, so that's nice there. Catering expense, now we gotta find. Oh, there it is. Let's put it at the top row. $216. Let's debit that. And let's carry it over to the running total. And I think, did we, shoot, no, I can't remember if I think we did the other side. Yeah, there's the cash payment, $2,400. All right. Okay. So we're on to February 17th. And cash and unearned revenue now. Increasing to cash of 12,000. And a decrease to increase to unearned revenue. And let's go to our liabilities. We're going to increase our liability with a credit. Just carry that over. No balance before that. Okay, we're done with that entry. Okay, received some cash and got consulting revenue. $6,000. Let's find our consulting revenue account. Shoot. I'm gonna cut that, Control X, Control V. Put the date. I meant to have the date. Pulled in the, I meant to pull them out and pulled in the date, but just to save a click or two, let's just move that over and then actually pick up the amount. Oops. Let's make that. What's going on with that? Funky. Made it into text for some reason. Okay, so let's take our previous balance of credit balance plus more credit. So an increase in revenue. So now we're up to 18,000 in revenue this month. That's pretty good. All right, we're done with that entry. Yeah. Okay, on the 23rd, we have some accounts receivable and consulting revenue, 4,000. And again, our previous balance plus our debits. Oh, that's funny. It wants to tell me I did the formula wrong. How it tries to tell you if formulas are off is because it's different than the ones next to it, because that's a common issue, but we're just going to ignore that error. And the error sign's like a little green tab on the side there. So accounts receivable up, and then what's the other side? Consulting revenue. Our credit goes to consulting revenue. And that was on the 23rd. Boom, boom. Let's take update our running total. Okay. Almost there. Come on. Getting close. Okay, accounts payable is going down, and cash is going down for payment to the law. For a couple invoices, I think, on that one. We're crediting cash, $1,600, and then we're going to credit AP for $1,600 as well. or if I might have said credit AP, I meant decrease AP as well, and we're going to debit by doing that by debiting. So running total, running credit balance total minus a debit gives us 600 left in our AP. I think that might be what let me see. Oh no, we had 1600. So, ooh, you know what? I think I forgot to put in the PG&E bill. Yeah, whoops. Let me do that now. So I want to make sure our ending balance in our subledger agrees to our ledger account for AP. So that is important to have it all in there. Okay, so we recorded those entries, the 1600. And now on the 25th, we paid dividends. And that'll be a reduction of our cash, 1600. And that'll be a debit to dividends. Oops. Okay. Oh no, sorry. Shoot, I had that in the right spot. 225. And then let's get the amount. All right. And cash went down. Or do we? Where's cash? Make sure I got that in there. Yeah, not 1600. I think that was 225. Yeah, sorry. Must have been in the wrong spot there. 1000. We'll get to the end. We have to check ourselves and see. I mean, there's a lot of room to make a typo doing this much manual entry. So fingers crossed. But that's a normal process of doing it like this. And then again, it just reiterates and reaffirms how important it is to use a modern accounting system that makes this so much more quick and efficient, less prone to error, etc. Okay. Anyway, on the 27th, we had telephone expense and AP increase. That's going to bring our balance in AP back up. And that was our telephone expense. Telephone expense, where are you? There you are. Oh, there you are. Down at the bottom. $1,000. Running total. Good to go. Perfect. That is done. On to the next. Okay, utilities expense. And then we're on to our adjusting entries and then wrap this bad boy up. And then we have to do closing entries still too, but whoa, we're getting pretty close. So now utilities expense and accounts payable. Utilities expense is probably down here at the bottom as well. Let's do that first. Transaction total, and then also our running total, and then AP was the other side of that entry. So 1830. I think that's the last entry to accounts payable. So now let's go check if our subledger balance is to our account at 1830. Nice, yeah, it does. So that's good. that's a key thing, is that you want to make sure your subledger balances to your general account. So 1830, you can see that matches. That's our ledger balance, our running total, and here's the detail behind that. And then let's look at the AR one too. I think we don't have any more AR entries. So sweet, that one agrees too. So there's 12,000 ending balance after recording all our ongoing activity, and that agrees to our subledger balance of 12,000 up here. And here's the detail of who still owes us payments. Okay, so now we just need to record the last few journal adjusting entries. So depreciation expense and accumulated depreciation, all that. Let's do the accumulated first as it's closer. 28th. Remember, it's a contra account, so it goes with the assets, but it's a contra asset. It goes with the assets, but it reduces, and so it has a credit balance, which is kind of the opposite, essentially, of asset accounts. Depreciation expense here. That's 175. Carry over. Or sorry, that's debits. Running balance. It's the only one. So that's done. What's the color I was using? That one. Okay. Okay, supplies expense and office supplies. Well, here's what I was talking about before. We want to reduce our office supplies down to 200. So we're going to do a $600 credit to office supplies. And let me update our running total here. So we had a $50 beginning balance plus that debit to give us $850. Ooh, and you know what? We made a mistake in our journal entry because I thought it only had an $800 beginning balance, but in reality, I thought it had an $800 balance just because we made that purchase, but in reality it had an $850 starting balance. So we actually need to decrease this by $650 to bring that down to 200, which is what it tells us. We counted, it just had 200. And so you can see the 650 is what we want, because if we take the debit balance minus our adjusting credit, 650, that leaves us with the $200 ending balance in accounts or in office supplies. And then our supplies expense. Here we go. 28th. I called it supplies expense. It says office supplies expense in the ledger, but we're going to just go with that's all good. 650. Okay. So close. Only a few more to go. Wage and salary expense and wage and salaries payable. Here's wage and salaries payable, so let's do that first. That'll be a 650, or this would be a credit. That's the credit piece because it's an increase in a payable. And then the other side, and that'll carry over to our running total. The other side is wage and salaries expense. On the 28th, it's a debit. Debit is an increase to expense, and we want to make sure we record it in both the individual transaction columns and the running total. Okay, we're done with that. Oh, I must have that in there twice. Let me delete that one out. Save it there. Okay. All right, just 2 entries left now. Unearned revenue, so we earned a portion of that revenue, so 3,000. So let's reduce our unearned revenue by 3,000. The 28th. Decrease is a debit. And that then leaves us with our credit balance, or put it in the credit column, credit balance of 12,000 minus 3,000, so we have 9,000 left. and that reflects 3/4. We reduced it by 25%, so that's 75% of the beginning total still to be earned. And then the other piece of that is recording the revenue side of it. And let's find our consulting revenue account here. Okay. Equals 19,000 plus 3,000. So we got 22,000 earned on consulting revenue in. I just saw one. I'm gonna fix our running total. So our total revenue earned then becomes 27,400 for the month. So pretty good. Okay, we have that done. Last entry. All right. Insurance expense and reducing prepaid insurance. Let's find our prepaid insurance first. Date. And now it's going to be a credit of 500 for the 1 month. And I can see I needed to carry the running total over. And then I forgot to do that before, but now we're going to decrease that by 500, ending 2,500, reflecting 5 months left. And the insurance expense part. That should be our last piece. I'm going to need to go rest my hand because this is a lot of scrolling and clicking. So I feel your pain literally right now if you're doing this along with me in Excel. Okay, all the way up. Come on. Okay, wait, almost there. 228 and insurance expense 500. And last thing, put it in the rolling column. We are done. Woo! All right, you guys just followed along. You're doing all that. Good job. Shake your wrist out. Ugh, stretch your hands, your fingers. That's how you get carpal tunnel. Again, this is more manual work than you would actually do in real accounting. So don't let this assignment put you off if you think this is what day-to-day accounting is like. Not really. Similar. I mean, you are on a computer all day, but not this much tedium of journalizing. So, okay. So now I just want to look real quick and make sure that we've got running totals that are all seem to be working, or that we didn't miss carrying them over somewhere. Okay, that looks okay. That's good. So all everything's reflected both in the individual transaction column and the running total column. Oh, here's one we missed. So we needed to increase our common stock by the 10,000 there. That's okay. That's prior month stuff. Okay. That looks good. That looks good. Yeah, good. Mostly these are all just one line entries, so not a lot of ups and downs. But you still want to carry them. Even though they're only one transaction, you still want to put them. This is where we want to pull our balances from for our ending balance totals for our trial balance. So, okay, so now let's go ahead and prepare our unadjusted trial balance. So let's go start up here. And I'm just going to link these over. So I'm going to click equals and then click back to this tab. And we're going to go line by line. Oh, that's kind of funky. Oh, shoot. All right, that's not really going to look very well. The way that this exported from PDF made it so I can't individually select the cell. So that's fine. We'll just type them in. So cash, we can link the balances. So 46,620. Okay, that's great. We have accounts receivables, our next account. And the total there is 12,000. Prepaid insurance will be our next account. And it's got a balance of 2,500. Office supplies will be our next account. And it's got a balance of 200, which agrees to our adjusting entry information. That's good. Okay, surveillance equipment. That's got a total, I believe, it's the cost, right? It's historical balance of 8,900. Then accumulated depreciation, I'm just going to do like that, surveillance. That is a credit balance, that's a contra asset of 175. That'll reduce, the overall balance of the surveillance equipment down to its depreciated net book value. All right, now we're on to the liabilities. So we have accounts payable. $1,830 ending total. Unearned revenue. Of 9,000. Wages and salaries payable. I think that was 6,500. Okay. Now we're on to our equity accounts. Common stock is a total of 35,100. Retained earnings. That is a total of 6,450. Income summary, we just use that for closing. It's got a zero, balance at all times, so we're not going to worry about that. Dividends, $1,000 debit balance. And then event revenue. $5,400. I think I know the next account is consulting revenue. What I'm going to do, one thing we can do is just, I can't specifically click the cell, but I can copy. That's a little easier. Double click into the cell there, and you can just paste up. That's one way to save a little time. 22,000 ending credit balance for our consulting revenue. Advertising expense will be our next account. And remember, our expenses are debits. 600. Geez, I don't know if it's easier to do what I was doing, or click in and paste, or just type it out. So I'm just going to type it out maybe. Depreciation expense. We're running out of spaces. We can fix that, but that was 175. Let's just highlight those cells and then click insert. Yeah, we'll fix that. Let's just copy that, paste those in. So just adding a few extra rows there. So I just highlighted the 3, and then you click insert and it'll just push them down, but then it won't merge these. So that's where I just copied those 3 cells and pasted over the new spots to have the same line there, or the amount of spaces. So insurance expense. Legal expense. What's left? Office supplies expense. A few more. Okay, I'm going to do that same process again. So highlight, insert, and then I'm going to copy this blank one just to get these ones to look the same. Copy, or paste, and paste. And what that's doing here is merging these cells so that it's all one thing, not a bunch of little, not in line with the columns. Okay, so that was legal expense. Office supplies expense is the next one. Postage expense. 180. Okay, no printing expense this month. Rent expense though. And I saw this telephone expense was the next one. Utilities. And then, yeah, I think utilities. Hopefully this is the last one. 200. Oh shoot, no. Last one here. We got a space for it. Wages and salaries expense. Whew. All right, got all those in. Now let's auto sum all these together. And that gives us 8,645. Ooh, in the moment of truth. There's a high likelihood I could have missed some typo or something. So at least all our debits and credits match. That is a great sign. And yeah, I'm going to do one thing here. I'm going to actually, you won't have to do this in your copy because this will already be done. But I'm going to delete, I'm going to delete this out, these extras out. Again, don't worry about doing this on your side. I'm just going to use this as our template for the adjusted trial balance, essentially. I want just one space below. I'm going to zero all these out, just because we now know that the total number of lines that we needed the rows is this. So that's kind of nice to just have. And I don't have to putz around with inserting the rows again. And our closing, this will be our adjusted. This will be our post closing trial balance. Okay. All right, we're getting really close now to being in a good spot. Oh, you know what? I just realized I made one mistake here. This is actually our adjusted trial balance, so I'm just going to change the title. And then our unadjusted is down because we included the depreciation and accumulated the adjusting entry information here. So let's see, how do I want to do this? Actually, so here's what I'm going to do. I'm going to link these above because we do want that for our adjusted trial balance will equal above. So this is just matching up to everything up here. It's got the same number of cells and everything. One thing we can do is just highlight all this and do our format painter. And then that basically gets us looking clean. Let's do that. Okay, so, and really all these, I'm just going to delete these out. These zeros. Debits and credits are equal. Awesome. Now, trying to think of the easiest way. Yeah, shoot, there's not really an easy way to fix this. So anyway, let's just go back through and fix our unadjusted trial balance. So our adjusted trial balance was good. And so these numbers are all solid. I'm going to copy this, paste values to lock those in. Because if I didn't do that, they would all reflect back up to the top. But what we want this unadjusted trial balance is to not include the effect of our adjusting entries. So our adjusting entries are all, let's see, where does it start? It's all of these ones. I'm just going to highlight off to the side. Boop. Okay, this shouldn't take too long. So we need to back out depreciation expense first of all. So we know that was, we can just delete that one because that was the only thing that went to depreciation and also the only thing that went to accumulated. So we're still in balance and that's good. Okay, so that we backed out depreciation expense. Again, we're backing these out because I forgot to not include them. First was the effect of the adjusting entries, which we're going to have a journal and trial balance. We are going to have a trial balance that does not include the adjusting entries, so it does not have these, and that's what this is. And then we need an adjusted trial balance that does include them, which is what we did at first. So I just pasted those numbers all down here, and now we're going through and backing out, removing the effect of the adjusting entries from this version, so we will end up with an unadjusted trial balance. Okay, so supplies expense. So supplies needs to go back up. So let's go link, or let's do it this way. Let's go with supplies expense needs to go up. So let's equal that. We can go into the formula here that's pulling from the ending adjusted balance and just add back. So put the plus sign and then come over here to supplies that went down, add back 650, and you get back up to 850 total. And then we don't balance now because we need to adjust our office supplies expense. So then same thing, go into your formula bar and put minus, you're not at the front, at the end of it, minus the 650. So it's going to take you to 0, essentially. Take that to 0, but that's what you want. So no supplies expense because we're not, this is the unadjusted version, and we're going to increase back our office supplies to take out the actual adjusting effect. Okay, so that one's taken out. Wage and salary expense and wage and salary payable. There's only one entry that happened in there for each of those, so we can just delete these two effects. See how they're the same on both sides, so let's just delete those out. And then unearned revenue and consulting revenue, we need to back those out. So 3,000 adjustment was made, so let's undo that. So unearned revenue is where? Right here. So let's again go into the formula bar, add the 3,000. So now unearned revenue is back up. And then let's go to consulting revenue, go into your formula, subtract out the 3,000. So now we're balanced again. And you can see the difference in the actual ending revenue is the 22,000, but before we did the adjustment, it's only 19,000. And this is the unadjusted trial balance, right? This is the adjusted version. Okay, one more undoing of the adjustments here. Insurance expense and prepaid insurance. Insurance expense we can just delete out because that was the only entry that was there. But we need to back out the effect on the prepaid insurance. So we're going to add back that what was a reduction in the adjusting journal entry. And now we're at a good spot with 79.78. We're balancing, debits and credits balance. Here's the unadjusted version. Here's the adjusted version. And from here, now we can prepare the income statement, or the financial statements, I should say. So let's look at here's our steps. So we've done 1, we've done 2, we prepared trial balance, we journalized and posted adjusting entries, we prepared an adjusted trial balance. Now we just have to prepare the financial statements and do the closing entries. So we're getting close. Oh, and I realized, as I said that, I should have left some space for us to do the adjusting entries, but no worries, we'll just expand this down. All right, so let's do our now. We're on step 6 here. Prepare the financial statement, the financials, yeah. And so I've got this little financial statement template. Actually, I'm gonna fix this. I need 2 revenue lines. In the version you'll see on the template, this will be fixed for you, so don't worry about doing this on your version. I need it for this version I'm doing right now, which I will then turn into your template to do your work into. Okay, so here we are. Let's go and record. Let's pick up our revenues. So we have consulting. Let's get down to the revenue accounts here. Event revenue is 5,400. And actually, you know what? I'm gonna be in a goof. Let's do it off the trial balance. That's a lot easier. And we want to do our financials off the adjusted trial balance. So we have consulting revenue, and we have event revenue. And I don't want these to be indented. I'm not sure what they are. That one looks weird. I'm going to format paint those so they're the same. Okay. And 5,400 and 22,000. And then total revenue becomes the sum of those 27,400. I think we're going to need some extra spaces for expenses too. We've got quite a few expense line items here, so I'm going to add a bunch of rows. And let's start pulling these in. So we've got advertising expense. And here's something we can just do. We can get the first one, and then we can just drag down because all the expenses are just below it. So that's the amount of lines that or rows that we actually need. Delete these back up. Okay. Sweet. And then let's just go over here and do kind of a similar deal with the linking to the numbers, and we can just drag that down again because it's got everything in a row. Total expenses here, I'm going to auto sum all these up, so 15,235. And then total revenue minus total expenses means that we earned 12,165, or the business, I should say, earned that much. Just out of curiosity, yeah. So that would be about $150,000 in net income over the year if every month was the same. Not saying it would be, but if it were. All right, now let's do our retained earnings statement. So we have our beginning balance of retained earnings plus our net income from up here. Let's add those together to subtotal. And then we've got subtraction of our dividends. And that leaves us with an ending balance in retained earnings of 17,615. Okay. And we can link that just for the heck of it now. Retained earnings, common stock while we're working on equity. Total equity equals 52,715. Okay, great. Let's do our assets though now. So we, again, similar thing. We can just drag that down, get all of our assets in here. And one thing how do I want to do this? Bear with me for one moment. Again, I'm going to have this will be fixed on your template version, but I kind of want to do something here. You won't have to do any of this, reminder. This is just me cleaning this up as I go through preparing it. Your version will be ready to input too. But I want an extra kind of row here for the contra asset stuff, the equipment. Okay, so one more time, you won't have to do that. Just keep that in mind. I'm just doing that in order to give us a spot to do our net book value. Okay, so cash, we got there. I'm gonna drag these down. Here again, what I was saying is, so surveillance equipment and accumulated depreciation surveillance is going to kind of be off on their own little spot. This gets us net book value, and we're going to just add that over here. So the net book value is 8,725 because of the contra asset. Okay, and let's fix that summation. Oh, I don't know what that's doing. Sorry, I don't know what's going on. Or let's actually, I'd rather have that down to match with. There we go. Okay, the total auto sum should be everything in the column above. And just to formatting purposes, having a $sign at the top and the bottom is kind of the standard formatting for these types of financial statements. Okay, so that's great. Now let's go into liabilities. We got accounts payable, we got unearned revenue, and not common stock. So just those three. All right, and so that's great. Let's do our auto sum there. So we've got totals for liabilities, equity, and assets. And now let's add our liabilities and equity together. And woohoo! Look at that. Let's do our little check figure. It works. So now we balance, our accounting equation, right? Assets equal liabilities plus equity. And it looks like we should be doing pretty good there. This is the check figure shows us everything balances and it looks like we're in a good spot. But you still would have to be careful because there is always the possibility that you accidentally record a journal entry twice, for example, or something like that. So going through and just really reviewing is still important at the end of the period. This is something we do every month as accountants, then would be to go back and look at all of our accounts and make sure that they look reasonable. There was not double entries made. Double entry accounting as far as debits and credits you need, but like just recording the full transaction twice, we would still balance, but we would be inaccurate. And we would find that out by doing analysis and reconciliation processes at the end of the period. So anyway, something to just keep in mind. Okay, so we're really close now. We're done for the month. We can see that we earned $12,165. And we can see these are our balances for our assets, liabilities, and equity at the end of the month. So we're looking pretty solid from a business perspective there. We got a lot of cash and AR, and so we're plenty liquid if we were to look at something like our current ratio or the quick ratio like we've looked at recently. And let's do our final step of closing entries. And so as I mentioned, I need to put some lines in here. I had deleted those out, but now I realize I need some extra space for closing entries. So let's do it. Okay. So again, we're going to do our closing entries on the same, just like the adjusting entries at the last day of the month. We are actually going to have 3 entries. I'm just going to kind of start from scratch here with those, but clean out the formatting. Okay, so remember when we're doing our closing entries, we have a kind of a 4-part process, REID, essentially. So we're going to close out our revenues, expenses, then we're going to have, then the income summary is going to close, and then dividends. And we're going to move revenues and expenses into the income summary to start, and then close that out by moving that to retained earnings. Basically doing what's on our retained earnings statement, but in from a perspective of journal entries. Okay, so remember, real simple. We want to essentially undo, reverse all of the revenues and expenses. I'm just finding spots where I could pull in there's 2 revenue accounts, so we have to do 3 lines in this journal entry. Now we're going to move those to the income summary, and did that. And we'll just say closing entry. Okay, and so we want to essentially zero out these accounts, so to close them. So consulting had an ending balance of $22,000. It was a credit balance, And so we're going to be debiting that balance now, essentially. So we can do it like that. And we can also, let's show it here. So consulting, this is closing. You can see we did it above in January, but now we're doing 22,000. And then the ending balance will be 0, right? Because we started with a credit balance of 22,000. Now we're debiting that. So that is now closed. Okay. And then we're going to do the same thing for event revenue. So let's see, what was our event revenue? Let's go to that account. Where's event revenue? Here it is, 228. Oh, geez, that looks weird. Let's do that formatting right. So 5,400, so credit balance, we need to debit that for 5,400. That brings our event revenue to 0 as we want it. And we're going to record that was the entry here we're doing. Event revenue. And then the income summary is going to be credited for that, for the amount there. So 20,000, 7,400. Okay, cool. We're done with that one. Now we're going to do the expenses, and actually I might need more room than this. Again, you won't have to do this. I'm going to make the template off my finalized version. So and now we wanted to close out the expenses. One easier way, actually, I'm thinking about this, to do the do these closing entries would be just a link to the adjusted trial balance, because they're all just right there. So actually, but first with the expenses, we're going to be debiting the income summary and crediting all the expenses. So let's just go off our adjusted trial balance and start with our advertising expense. Well, that didn't work. Okay. Why did that not work? It's not like that for some reason. Interesting. Okay, I'm going to do one thing here. I'm going to go through and copy, paste values, so it gets rid of these links, because I was linking those over. I think if I do that, it will allow us to. No, it does not like that at all. Why is it doing that? Oh, it's because it's a merged cell. How funky. Okay. I got another strategy. I want to make this easier. So I don't have to scroll back up and down. So I'm just going to copy these out. I'm going to paste them into one. This is all the expense account names. And then now those are not merged together like they are over here with these 4 cells merged. So now it should work easier for us to link over. So let's just link to those. Yeah, there we go. That worked. And postage, wages and salaries expense is the last part. And then let's highlight all those and indent those a couple times, because those are the credits. And now we should be able to link to the balances, because those are not merged cells. Here we want to go to our adjusted trial balance. So let's drag all those down. And then the total of that is going to be debited. All the expenses will be debited to the income summary. Ooh, another place we could have just linked those off of here as well. Actually, that would have been maybe smarter, but that's okay. We want to be careful when we're linking those. Let's just copy and paste values. So we break the links. So in case we just went back and deleted out our little extra work we just did to make that work, then it won't delete these, won't mess up those links. Okay, and our total should balance to the income statement too. So 15,235, 15,235, great. We're looking good. And now, geez, copy and paste that in. Now we're going to close out the income summary. So remember, I mentioned this in class. The way I like to look at this, and figure out whether I need to debit or credit the income summary to close it is to look here and just think about how do I get this to balance, basically. So you can see that the credit side is 27,400 for income summary and then 15,235. So we need to take the difference between those, or 12,165, and to debit that to get them to balance, which is essentially another way of saying to close the account. Okay, so we don't want that looking like that. So like I said, just take the difference between them. So we're going to debit the income summary, and then we're going to credit retained earnings. Format paint that to fix the italicize, indent spaces. And that's going to be, and keep in mind, that's the same thing as the 12,165 of net income. Moving into retained earnings, increasing in retained earnings, just like basically, like I said, we show that in the retained earnings statement. All right, very last step. Well, we do have to put our closing entries into the journal, I guess, but almost the last step of closing out our dividends now. And I'm going to do a similar. I'm just going to steal this, paste this here, and I'm going to say, again, this is the opposite. Actually, what we want to do, I'm going to link to retained earnings. We want to debit retained earnings, and we're going to credit dividends for the balance that's in there. Adjusted 1,000, and that'll close out our dividends and decrease our retained earnings, which again, that's the same thing, right? We're decreasing retained earnings, essentially is what we're showing in this report, but that's what we're doing with these journal entries. Okay, thanks for following along. And the very last thing we need to do, we're almost there, almost. We just have to journalize these closing entries. And so we did that for a couple of them. Let's just kind of show that here. So our income summary, I think we need to hit the income summary account though. I don't want that. Yeah, I'm gonna fix that. I don't want this to be. Dang it. I think I picked the wrong cell. Sorry, bear with me for 1 sec. No, maybe that was the right one. Okay, income summary. Oh, holy moly. Now it's going all weird. Let's just leave that be. Okay, so we're crediting the income summary first. That's the first entry, right? Credited 27,400. And we debited consulting revenue and event revenue. So those are 0 now. That's good. That's what we want. I'm just going to put closing here. And then we want to do kind of this, same thing you can see above for all of the expense accounts. So income summary is going to get debited now. If I can find it. I'm just going to link to the same date above because it's the same date as we're doing all our closing entries. But that's going to be a debit for all the expenses. 15,235. And I'm going to copy, paste value. Oh, not there. We already closed that. But just to make this easier, so we're not having to link back and forth and scroll up and down a ton, I'm just going to go through and do all these closing entries to show how the expenses get closed out. So anywhere there's an expense, we already closed out the revenue, but then anywhere there's an expense, we're basically just doing the opposite. If there's a debit balance, we're crediting. No, they're all being credited, and then it's all going to 0. So I'm actually just going to copy this whole row because I think that's going to be pretty much the same. Yeah, if you have the formula, it just pulls in the next balance up, and then it'll do the same formula here to 0 that out. I think that's a pretty quick way to do it. Legal expense goes to 0. Office supplies expense, everything should be 0. Oh, that didn't work for some. Oh, printing expense. Sorry, there was no current balance. That was from last month. Rent expense is 0. Telephone expense is 0. Utilities expense is 0. And wage and salaries is 0. So that's the same thing as, that would reflect the same as, all the debits and credits we did in the closing entry in the general journal. That's all those. It's just easier not to link back and forth. So same thing. Okay, and then we need to close out the income summary account, right? So that's where we're gonna go. If I can find it. Okay, so again, same date. But here we're gonna, let me do my running total. So we had credited 2,700, so 27,400. Then we reduced it with a debit, so now we have 12,165. And then when we did our closing to close out the income summary, not a credit, we want to debit that since it has a credit balance now, then it's going to be credit minus the debit to go to 0. And then the other side of the entry is a credit for 12,165 to retained earnings, which is right above. And that increases our balance in retained earnings to 18,615, which should match. Yeah, we got one last thing to do. I was like, why doesn't that match? The last part of the journal, the closing entry there, is to close out dividends. So we got to close out dividends, find dividends. I'm going to, again, steal my thing there, paste it in. We got the right date, it says closing, does the right deal there, and it zeroes it out. And then we need to hit retained earnings for that. This is 2-28. It does not like me typing that in. Let's link it. Okay, and then we were crediting here dividends, and we're debiting retained earnings as the other side. And so we'll take our credit balance minus the 1,000 debit. Now we're at 17,615, and that ties out to ending retained earnings statement, and that kind of proves out that we're good to go. And as you can see, so now all of our income summary went to 0, which is what we expect when we're done with closing. And then all of our revenues and expenses and dividends have all got a 0 balance now. And when we start recording March entries next month, it'll just start from fresh, essentially, right? Those are called temporary accounts, revenues and expenses, because they zero out every period. All right. Well, thanks everybody for following along. That basically brings us to the end of the project. And I guess the only thing I would say, if we really wanted to do our post-close trial balance, which it doesn't specifically ask us to do necessarily, but that would be not too difficult to do. We could just link to it from our balance sheet, essentially, because that'll show the same thing more or less. It'll just have no temporary accounts. Equal negative to get a credit there. And then we're going to say accounts payable, unearned revenue, wages and salaries payable. And then common stock will be what it is. But then retained earnings is now the 17,615 that we saw when we did all of our closing. And then all of these other temporary accounts here are now 0. No balance in there. We still debits and credits match. And then going forward, like I said, when we start March, these are all ready to be transactioned into and start accumulating revenues and expenses and dividends again. So, all right. Well, thanks everybody. Like I said, if there was any little formatting stuff that I did, you shouldn't have to do that, because I'm going to create the template to input that you can work off of with those formatting and all that already done. So be a little cleaner for you. But hope this was helpful. It's a big project, but I know this is a really important lesson to bring all the foundational accounting stuff together. So hopefully get her done, and reach out to me if you have any questions, and I'll see you in class or in the next video. All right. Thanks, everybody. Have a good one.